if you run a correlation between gold and CPI, and okay, CPI is BS, CPI, whatever, still, but it's the number we have, right? So if you run a correlation, it's very low, almost non-existent relationship. How can that be if gold is an inflation hedge? Well, it's because gold leads. So, in 2020 happens, you can see the inflation writing on the wall. It's not the big, beautiful bill, but it's like that. The money helicopters, the fiscal dominance with gusto is there. Gold sees it, and it takes off. And then lo and behold, I think it takes a year and a half, 2 years, and then inflation goes up to 9%. So, and by that time, gold's going sideways. So, gold goes up, inflation's doing nothing, no correlation. Gold's up, inflation goes up, but gold stays there, no correlation. You see what I mean? So here's the thing. Gold just goes screaming up to 3,500, and the inflation has been going down. But if gold leads inflation, where does that tell us about where inflation is going?
Think. Act. And prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. We are at the last day of the Rule Symposium, and today I'm with the Independent Speculator himself, Lobo Tiggre. How you doing today?
Glad to be with you.
Yes, a lot of sentiment has changed. I mean, the symposium has picked up attendance, and it seems like there's more deals going on in the space, and gold price is higher, measured in dollars and stuff. So what are you seeing? Like what kind of sentiment, what kind of, what has the experience been like for you?
Well, the show is bigger, and the vibe certainly is better, and I think that's not symbolic, but symptomatic maybe is the word I'm looking for, of the whole market sector. It's hard to be depressed when gold keeps holding up above 3,000. Really 3,300 to 3,400 has been the range since that 3,500 peak. And that's really significant because if you adjust the 1980 peak, the previous all-time high for CPI, works out about 3,500. And so to hit a long-term peak like that and bounce off, there was a lot of fear from insiders that was the new peak and it was going to be downhill from there, 2011, 12, all over again, right? And yet that's not happening. Yeah. And all the things that would normally whack gold down haven't done that. Now, it's only been a few months, so never say never, but the feeling is actually quite strong. And what I like about this is it's not just gold bugs. It's not just people like you and me here at this conference. It's the mainstream is really getting the memo. Now, the average person, it's not quite the mania stage where, your bartender and your shoeshine boy is talking about gold stocks. But it's really striking to see not just the, odd man out every once in a while mentioning gold on mainstream financial media, but the interviewers saying, oh, what are you doing in all this chaos? Are hedging with gold? It comes right out of these people that all they could ever say before was NVIDIA, Apple, Microsoft, whatever, right?
Yeah, that's true. Some of the big news that I heard this week was about, I didn't know Tether, the stablecoin, has been buying tons of gold. And thinking about their assets are U.S. Treasuries, and they got hundreds of billions in U.S. Treasuries, and then now they're pivoting we need
that was
we need some real money.
I didn't know that either, and I thought that was really interesting because, Tether is big enough to move the treasury market, and that's the biggest, most liquid market in the entire world. So for them to be participating as a buyer in the gold space is really interesting. And that there's several ways to go here on this, but I think, to me, the most exciting thing about this is there's this false narrative, this people on both sides, I think, have tried to set up this false argument of this conflict, gold versus Bitcoin or gold versus crypto. And that drop gold campaign, right, from the crypto crowd, it was ridiculous. And or the gold bugs who just want to heap hate on the crypto space. And my argument for a long time has been the crypto crowd has educated not one but two generations of younger people on the dangers of fiat, which we old gold bugs we couldn't get through. They wouldn't listen to us old boomers, or I'm a Gen X, but still, right? The young people were not listening. They were not into it, and the crypto crowd opened their eyes. The scales fell from their eyes. So advocates of hard money, I think, owe a big thank you to the crypto crowd for that help. But where I'm really going with this is, okay, there are Bitcoin maxis, they want to hate everything except for their baby, right? But most of the people in the space, they're sensible people looking at what works. How do we make money? They made a bunch of money speculating on cryptos, and now they look for the next speculation. I have people that work for me who came in at that route. Young people who made money in cryptos and then started looking around and saying, "Oh, hey, there's metals and mining and gold's going up or whatever." Right? So that really is happening, and so to see Tether do this in such a big way, I think really puts a big double line under what I've been saying, that it's just not true that the crypto crowd and gold bugs have to hate each other.
Yeah.
The real enemy is fiat, folks. Let's focus on the real enemy.
Mm-hmm. Yeah, for sure. Yeah, so, and with that, I mean, you got me thinking about, because they did educate like a younger generation. And I think that younger generation also got some painful lessons with like, FTX and all of this risky stuff. And understanding, okay, there's different hard monies. There's only, you have gold, right, which is money. And then now, even with Bitcoin being classified as a commodity and such, and only going to be 21 million, those are like the only two. Gold is obviously much bigger, much more massive. I mean, it's like, 10 times the market cap of Bitcoin?
Well, if you're going to use the word massive, Bitcoin has no mass whatsoever.
Yeah, that's true. That is true. But thinking about that, like, okay, now you have this educated younger generations, and some of them got some painful experiences, with some of these, coins that just went to zero and collapses. And that was, I think that needed to happen. I mean, obviously, you don't wish no one loses anything like that, but that's part of
some educations are worth paying for.
Yeah, agree.
Easy come, easy go. If anybody comes at you with a get rich quick scheme, and it doesn't have to be crypto, it can be gold stocks or how many shameless promoters are there out there in our world of metals and mining, right?
Yep, exactly.
Nobody has a monopoly on perfidy, and that education is worth. But the beauty of it is, if you're a young pup and you made a bunch of money on some speculative coin and then it evaporated, if you're 19, you got no kids, you just pick yourself up, dust yourself off, and do it again, right? Learn again. So I don't mean make the same mistake again. You keep going. So we don't wish ill on anybody, but I do think people learn lessons, and I'm really optimistic about that. I see a lot of young people that, my hobby is teaching entrepreneurship in Eastern Europe, and these people are very savvy, and they're all over all the new technology and all these things, but they're not hostile to my old boomer business, right? Yeah. They're smart, and they're looking for anything that works. Mm-hmm. And in a world where the physical world needs commodities anyway, always did, but the world where we're going now, where Europe is building out weapons like preparing for World War III, and the U.S. is reindustrializing, and China is going. This is a world in which the demand for raw materials, the stuff that we, work so hard to get out of the ground here in this business, and anybody can see that. Like, there's opportunity here, and if your goal is to make money, if you want to be religious about gold or Bitcoin or whatever, that's an ideological crusade. But if your goal is to make money, then you want to look at where the opportunities are. And my experience is that young people get that. Most young people are not, frothing about the mouth about some ideological program or agenda they have.
Mm-hmm. Yeah, for sure. So with gold, we have a lot of central bank buying still, and that's almost like provided this. I think it's kind of provided a floor for the price. The price is just consolidating. I think it's building like a bull flag. What do you think about the Western investor? Getting into gold? Like, I keep hearing different numbers, and I don't know if the numbers have been updated since gold has, risen significantly in price. I know that there's been more headlines on gold and such, and so I'm kind of wondering, like, are there more Western investors, getting interested in this, or what?
It's early on the data on that. We do have, just this week we had, I think the WGC just reported that we had record inflows in the first half of 25. The first half is now done, right? And we had record inflows to gold ETFs and the like. And that's a Western focused thing. So that begins to show us the data. me go back to the central bank buying thing for just a moment, because I think that's really important. Right? It used to be in just last year or a couple of preceding years, any little hint about what the Fed might do and gold would go up $100 or down $100, because, the Fed's going to raise interest rates or lower interest rates or whatever. And now you see massive headlines, huge beats or misses on labor reports or inflation reports that would have really sent gold up or down like crazy before, and it's just a nothing burger. And I think that has to do with what Lynn Alden, you mentioned, fiscal dominance mattering more than monetary policy at the moment, the fiscal dominance just with gusto out there, and the central bank buying, the floor that you're talking about. If you're the BBOC, the Bank of China, you don't care whether the Fed is going to cut a 0.25% rate or not. Like, that's not going to make you buy or sell gold. You're trying to protect yourself from Washington, D.C., and so you're going to buy the gold anyway. And these people are smart. They're buying the dip. And so I think this explains a lot as to why when headlines that would have whacked gold before, they just produced a little wiggle, because it's not just China. There's everybody, even allies. I mean, heck, if the United States can threaten its closest neighbor and trading partner with becoming the 51st state, whether it wants to be or not, what ally feels safe from Washington, D.C. in that circumstance? And sorry, I don't mean to be hypercritical here, but these are just the facts, right? So, I mean, if you're a European ally, for decades since World War II, you still got to be asking yourself, well, gee, maybe hedging my bets a little bit, not depending entirely on the dollar, wouldn't be a bad thing. So I think this is a megatrend. This is a one-way door. We don't go back to how things were before. It's not just Trump. I mean, it was Biden that weaponized the dollar against Russia. Yeah. And that was a wake-up call that I just don't think is undoable. Yeah. So that's great. It puts that support there. Now, to your question, though, that's everybody else. What about the West? Well, Europe is still the West. H1, 25, all those inflows, the ETFs, I think that's a sign. But this other thing that I mentioned before about the talking heads on financial media and people saying, we're also hedging with a little bit of gold. And you've got, Jeff Gundlach on there saying, gold's a real asset now, not just for lunatic survivalists. And then Nassim Taleb, who is not a gold bug, saying gold is the new reserve currency. So it's just anecdotal, or soft data, we might say. But the soft data says that people in the West have gotten the memo, at least money. It's like I said before, it's not the average shoeshine boy or bartender. But people with money are starting to say, you know what, in this world, a little bit of real money might not be a bad thing. Mm-hmm. So that's my answer. The soft data says it's coming.
Yeah. And, we kind of spoke to this earlier with the gold and Bitcoin crowd. And I think that ultimately the concerns that are happening in the macro and what's happening with, tariffs and things like that are really causing people to think, and educate themselves. And I mean, I think I would argue some of the pro-crypto, pro-Bitcoin crowd have educated themselves on gold. I mean, seeing gold's performance, because for a while it was like, it's supposed to be a hedge against inflation. And now they're saying like, well, actually, it did hedge against inflation to beat the S&P, right? And same thing for some of the Bitcoin, some of the gold crowd, the gold bugs. I've seen some kind of shift in some of the mentalities on Bitcoin and such.
Famously, my mentor, Doug Casey.
Yeah.
He was hostile to Bitcoin before, and now he's a big proponent, and he's made some money in that space.
Yeah. And I don't know how long Ray Dalio's been in there, but he's even advocated for allocating having a little bit of Bitcoin, gold, and such. And so I think that whenever folks are educated, and seeking of knowledge, they begin to understand and they change their positions. And so that's been something that's very important. So we recently had, the big beautiful bill pass, and this is going to add a lot of trillions to the deficit. Lynn Alden wrote the piece about fiscal dominance. Nothing stops this train, and gold is typically risen as the deficits and spending keeps rising. Gold also responds to that too. And so, do you have any view there on how this may impact the price of gold? Well,
you said that twice now. I always have to push back because I know you agree. If gold is real money. So I think of gold as a forex question versus the dollar. This is not the price of gold. It's the gold-dollar exchange rate. The same way you'd say the
Exactly.
euro-dollar exchange rate or the dollar-peso exchange rate. So it's the gold-dollar exchange rate. And here's the thing. If you run a correlation between gold and CPI, and okay, CPI is BS, CPI, whatever, still, but it's the number we have, right? So if you run a correlation, it's very low, almost non-existent relationship. How can that be if gold is an inflation hedge? Well, it's because gold leads. So, in 2020 happens, you can see the inflation writing on the wall. It's not the big, beautiful bill, but it's like that. The money helicopters, the fiscal dominance with gusto is there. Gold sees it, and it takes off. And then lo and behold, I think it takes a year and a half, 2 years, and then inflation goes up to 9%. So, and by that time, gold's going sideways. So, gold goes up, inflation's doing nothing, no correlation. Gold's up, inflation goes up, but gold stays there, no correlation. You see what I mean? So here's the thing. Gold just goes screaming up to 3,500, and the inflation has been going down. But if gold leads inflation, where does that tell us about where inflation is going? And what's interesting about that is it's before the big, beautiful bill, but you knew what Trump's agenda was. And since the election, I think the clear-eyed people were saying this agenda is inflationary. Even if you agree with it, if you support everything Trump says, you should still be aware that this agenda is highly inflationary. And now we're starting to see it happen. I mean, the big, beautiful bill, fiscal conservatives out there, they must understand what this means, right? So I don't know the future. I'm not promising anything, but I think it's really interesting that, gold led in 2020. And what does that imply about gold's big move this year? And its refusal to back down?
Yeah, definitely. So silver today is close to $39 an ounce. And I know at times folks have compared you to called you the Darth Silver, right? Are you looking more like Luke Silverwalker, or like what's happening there?
Well, I've been writing about this quite a bit this month. It's been interesting. And we don't need to get too lost in the weeds, but it's not just silver. Platinum is up more than gold or anything else this year of our favorite metals. Platinum was up 54% year to date last time I looked. And palladium's following along. And all of these expensive silvery metals kind of moved up at once, month and a half ago. And so that made me question whether it was just the silver thing. And people are all excited. Silver bulls are like, oh, this is it, we're going to the moon. I'm like, well, wait a minute, there's something bigger going on. And then silver and rhodium, for some reason, kind of went sideways while platinum and palladium continued rising. And now silver is moving again. I think this bears watching. I think it's significant. And the Darth Silver thing was because I said that when gold goes back into circulation as money, we don't actually need silver to make change anymore. It doesn't guarantee that silver will be used in currency form again. And people didn't want to hear that, and hence Darth Silver. It was never a bear case against silver. I've never been a bear on silver for a long time. So I'm watching it very closely now. It makes me a little bit nervous to see other metals with industrial use cases, which silver does have, moving at the same time. And because Trump shock's not done yet. We just this morning, as you and I speak, Trump's talking 35% tariffs on Canada again. And just a couple of days ago, 50% tariffs on copper. And there's all this, but is it the art of the deal? Does it all go away the next? It's such a chaotic time. I'm not making a bear case again. Call me Darth if you want. All I'm saying is there are reasons to be cautious about silver's breakout. I'm glad, I'm long. I own silver stocks. I'm glad to see silver go up. But would I sell everything else and pile into silver now because it just broke above 37, which had it bounced off before? No, I wouldn't do that. And when I'm buying stocks, no matter how excited I might be about the underlying metal, I still want a value proposition. I don't subscribe to the greater fool theory of investment. I'm not going to buy high and hope to sell higher. I want to still buy low. So all of this is still on the table, dear silver bulls. But yeah, I'm excited to see it. I'm long. I'm ready to profit. And I'm just a little bit cautious because Trump shock ain't over yet. And silver is still subject to its industrial side.
Yeah, got it. So other commodities that we talked about in the past were copper and uranium. And so what are you seeing on that front?
Very bullish on both. I see copper, like we just talked about silver, you have to consider its industrial side. Copper is all industrial side. And, people are all gaga and the stocks have moved because we have all-time high price of copper because of Trump's new tariff threat. But that's U.S. copper. I haven't checked today, but yesterday or the day before when I looked, London copper was actually cheaper than it was a year ago. So I posted a chart. People didn't like this. Maybe I'm Darth Copper now. People didn't like this. I posted a chart on my Twitter feed of an alligator jaw. You get these alligator charts of two lines diverging. And the upper jaw was U.S. copper, and the lower jaw was U.K. copper. And you want to stick your hand in there. If the bottom jaw goes up and copper goes, it's great. But if the top jaw comes down, you can get your hand bit off. So, and I'm a copper bull. I'm just saying there's reasons to be cautious in the near term. But longer term, Lynn Alden, fiscal dominance, money, helicopters, blanketing the sky. And unlike, say, oil, which has voluntary supply constraints still, copper has structural supply constraints. There's not enough copper mines. Even if we permit, Trump permits everything in the U.S., even if the Chileans get their act together and, gangbusters, there's not enough copper on the way. So I'm extremely bullish, just near term, hoping for a buying opportunity, actually.
Yeah.
And on uranium, real quick, I love uranium. It had corrected already, and I don't usually try to time market bottom. I don't try to time market bottoms, but it seemed to me that the market was carving out a bottom in uranium, and that worked out really well. But now it's waffling again, and we'll see. The uranium story is so strong that even with spot uranium dropping and all that, the stocks held up quite well overall. And now they just came back again. What I'm saying is I'm very bullish, but don't chase uranium stocks either. Jim Cramer, mashed his big buy button on TV, and I heard him. He said, "Buy everything uranium." And then lo and behold, uranium corrected. But the stock's not so much. I don't know if that's the Cramer effect or what, but markets fluctuate, dear audience.
Yeah.
Don't chase these things. The biggest and most famous uranium stock in the West, everybody knows who I mean, they were at a 52-week low just a couple months ago. And then they hit an all-time high just a week ago. That's not the time to buy. 2 months ago was the time to buy, right? So markets fluctuate. Watch for the next dip. Don't buy everything uranium. Stock selection still matters on all of these.
Mm-hmm. So thinking of stock selection and just investment principles, we had the recent Liberation Day effect, and for me,
which was a great opportunity.
Yeah, it was. And so I was kind of wondering, how do you approach that as an investor when you see that in the market, see that happening?
Well, fortunately or unfortunately, depending on how you look at it, we don't get opportunities like that every day. But when that happens, when stuff sells off for the wrong reason, like another example, very clear recent memory, was when that DeepSeek thing came out of China, and suddenly it's like everybody's, oh, well, we're not going to need so much energy for data centers. And energy craters as a sector, and spot uranium falls. And, nuclear power is baseload. The whole AI thing was just hype on top of an existing bull market. Yeah. And so for uranium to sell off because of that DeepSeek thing, it was completely wrong-headed. The uranium wasn't up because of DeepSeek. It was up because of everything else. Yeah. And then so even if DeepSeek meant, no AI demand, which isn't true, but let's imagine that it meant there's going to be no demand for energy from AI, or copper, by the way, right? It wouldn't change your reason for speculating on uranium stocks. Mm-hmm. And so and a lot of these things just got hammered. 52-week lows I was just mentioning, right? And for the wrong reason. So this is an absolute gift. When Mr. Market goes psycho and he completely bails on something that's necessary, it's not going away, and for the wrong reason, that's when I start thinking about selling a few pints of blood, another garage sale, anything I can to raise cash to go, to buy with both hands. Doesn't happen all the time, but when it happens, that's some of the best buying opportunities you're ever going to get. But if you're talking about lessons, this is just a variety of the main thing that I said earlier. It's not me, it's everybody, all the investing titans for the last century will tell you the idea is buy low, sell high, right? And this is just an example of how sometimes markets will hand us this opportunity. It's anti-FOMO formula. Like if you caved into FOMO and then something like this happened, you'd be kicking yourself.
Yeah, you'd be selling at the bottom, right?
That's right.
So tell us about the Independent Speculator. Like what's in the newsletter? What can the audience? How does this help people navigate these?
For all three people who didn't stop listening when you said that, I'll say quick roll three things. One is I have a free letter called the Speculator's Digest. You may not agree with everything I say, but if you sign up, I promise you get 1 email per week, no flood of spam. I stand by that. The Independent Speculator is built around my own portfolio. It's what I'm doing with my money. So it's completely skin in the game. And it's a very high-end service, daily news sweeps, alerts, all that stuff. In between those, we have something called My Take, which isn't really a newsletter at all. It's a database. It's got about 1,000 resource companies in there. We take requests. It's growing. I have a team. Even I can't track 1,000 companies. I have a whole team. But it's a frequently updated database with a clear thumbs up or a thumbs down on all these resource stocks. So it's kind of like Consumer Reports. And if you know what you're doing and you've already got your own portfolio and you want an independent evaluation or a second opinion, or maybe you're not sure which stock to sell or take profits on or something like that, My Take can help.
Yeah. Okay, well, you all be sure to check out the link in the description below. I'll link to that newsletter where you can get the free subscription, or you can also subscribe for a fee. And Lobo, I'll link to everything where people can find you on X and get some of your commentary, like alligator jaws and things of that nature. So
yeah, the Twitter feed is fun. I post daily, and we try to have fun with that.
Yes. Well, appreciate you for coming on.
Thank you, brother.
Yeah.